Hello from Trend Signal for a review of the data and events of the week beginning the 7th of January 2019, the first full week back after the new year. Markets already feeling quite bruised, and we're only on the 7th of January. Markets made a pretty astonishing recovery last Friday, following very good non-farm payroll numbers and comments from the Federal Reserve. Jay Powell saying that the economy was reasonably strong and talked about a measured response that the Fed will take to raising interest rates. Rather a Goldilocks event if ever there was one. Certainly the Fed have indicated they expect to raise rates twice this year, although the markets don't actually expect that. The dollar rallied on the back of the turmoil midweek, certainly, but fell back as markets did recover their poise on Friday. We have the Japanese yen flash crash was the major event in foreign exchange last week, as traders returned to work and confronted with, well, let's face it, the Apple profits warning, or they called it a revenues warning, but it was a profits warning, and some poor data out of China. So the flash crash, or flash rally really, for the yen happened when the Japan was on holiday, and it happened in a very thin part of the trading day after 10 o'clock, in fact at 10:40 p.m. Anyway, that rather caused a lot of tongues to wag, but a 3% rally by the yen against the dollar in 8 minutes was certainly something to write home about, because a 1% move in a foreign exchange pair in a day is regarded as a big move, and that happened in just a few minutes. Needless to say, the move was reversed when liquidity came back into the market, but some of the damage was sustained. Friday, we had some very strong payroll data out in the U.S. For the month of December. 312,000 jobs created in December, which is astonishing, really. 130,000 more than forecast, with the previous month's number also been revised up by 20-odd thousand. Normally a very strong number, actually. It might encourage the belief that interest rates would be getting higher sooner rather than later, but the market also got some fairly soothing words from Jay Powell, the chairman of the Federal Reserve, that encouraged really a wave of buying that pushed the S&P up 3.4% and the Nasdaq up 4.3%. So Mr. Powell's words were soothing, clearly soothing. He said he was sensitive to the markets and would be patient on monetary policy. I think when he said sensitive to the markets, maybe he said sensitive to Donald Trump. He is in a bit of a cleft stick. So strong employment data indicating a strong economy with an understanding Fed. I wonder how long that'll last. Anyway, the whole move started with news that the US and China would be meeting this week to discuss the trade tariffs and resume trade talks. So optimism abounds, but then that's what's supposed to happen at the start of the year, isn't it? Yeah, right, as they say. So let's have a look at the what's happening this week. Let's get on to the right week. Data and events. U.S. negotiators have just said are visiting Beijing to resume trade talks with China. As with all things involving Trump, you never quite know where this will go. Can Trump back down? I very much doubt it. Can Xi Jinping, the People's Republic, back down? It's in both their interest to do just that, but they're playing to their own domestic audiences. Market remains pleased for now, certainly Monday morning, giving up a little bit of ground after the first sort of hour and a half, but optimism may soon be replaced with reality. But looking at the headlines, they're all quite positive in the FT. US-China trade talks buoys stocks. And then on Reuters, weakness in China economy gives Beijing incentive for trade deal. I read that headline. I thought, wow, that's quite interesting. And then, of course, that wasn't said by anyone apart from Trump. So Trump believes that the weakness in the Chinese economy will force China into a trade deal. I just don't think that's how it's going to pan out. But anyway, time will tell. That's happening this week. Let's get on to the rest of the data. We also have Brexit, of course. Well, Brexit's not listed here as an event, of course, but the MPs have returned in the UK from their Christmas break to debate May's Brexit deal, with the vote happening next week. Some people are saying next Monday, which will be the 14th of January, but it is sometime next week. But nothing has changed, really, apart from both sides seem to become more entrenched in their positions. Rather strangely, the odds of a no deal are still quite low at 35%, which suggests, well, a second referendum, anyone? I'm not sure. I don't think that's the way it should happen, but there we go. Anyway, Monday we have the US service sector called the non-manufacturing PMI data, a softer number expected, but after last Friday's non-farm payroll data, maybe they're looking for a stronger number. Tuesday, a little news really, apart from obviously the usual feedback on news coming out of the US-China trade talks and anything that the Brexit has to throw at us. That's going to carry on, isn't it? Wednesday, we have the Bank of Canada monthly policy meeting, and they are going to be raising rates by 0.25% to match those in the United States, which were raised 0.25% at the end of last year. Press conference could be interesting. Always interesting to see what the governor of the Bank of Canada has got to say about future rate policy. We then have probably one of the most important events of the week, really, the release of the minutes from the last Federal Reserve meeting, the last FOMC meeting. That comes out at 7 o'clock. More insight into Fed thinking about reasons for the rate rise last month. More importantly, also what's in store for us this year from the Federal Reserve. So those minutes will be quite illuminating. Thursday, loads of central bankers speaking. Wednesday and Thursday, we've got Carney on Wednesday. Thursday, we've got a plethora of Federal Reserve members speaking. The highlight probably going to be Jerome Powell, speaking at the Economic Club in Washington, a luncheon, apparently. Lucky him, he gets fed as well. Friday, not a lot to talk about. It's the monthly GDP data. That hasn't attracted much attention at all. We really still focus on the quarterly stuff. Production, manufacturing production, a rebound, a Brexit-inspired rebound, like we've seen just recently. And then to cap off the week, an important number from the US, the Consumer Price Index, or inflation data. It's a core number that excludes the more volatile food components. Plus 0.2% is what we're expecting, another benign number. I do think that might be the story of the year if inflation does start to take off in the US, but no sign of it just yet. Anyway, that's it. Thank you very much for listening. All the best. Bye now.
If you would like more information about trading the right way, Trend Signal is giving you the opportunity to see and hear about its services live at a free online seminar. Take a look at the Trend Signal website for the latest events and to book your free place.